Alright, ladies and gentlemen, welcome to another week in 2023. Let's have a look how we're gonna beat the market this week. So first off, before we even do anything, let's go have a look at the main markets that really set the direction for everything else. So we're having a look at SPX here, and let's start by zooming out. Let's zoom all the way up, weekly time frame. What are we seeing? Well, we're seeing this kind of edge that a lot of people paying attention to and probably expecting some breakup here. So we want to keep that in mind, that people are looking to trade this. They're looking to trading this breakout, and usually a breakout like this is followed by a vicious dump. So you can expect something like this. Would not surprise me at all. So I'm keeping that in mind. I'm seeing on the... Let's have a look at the wicks. Alright. So you can see the wicks, which is the volatility index. It's pretty low. It's trading around 19.77. So that gives us room for volatility, which gives us room for a big move up, for the big move down, or some kind of fake out here followed by downside. At least that's my bias towards here. So the VIX shows that we definitely have room for some volatility to come into the spectrum. You can see again and again that it falls and then it spikes and it falls and it spikes, fall and spike, and now it has fallen, and then there will be a spike. Okay, so if we're looking at RTD on SPX here, what we're seeing? Looks like it needs a moment to calculate. Okay, so do we see here? Yeah. You can see we have this repeated pattern of a downtrend starting, some kind of retest, and then a further dump, and then we have a break above the global trend. The local gets strong for a moment, and then it just absolutely dumps again. Repeated by a second dump, recovers, dump a little bit, back here. So it's a pretty repeated pattern. And right now, if you look at it, we didn't have that big dump from here like we usually had. So that's something you want to keep in mind, that maybe there is a bullish scenario here. Maybe this is moving into a trend here, but I personally feel like it's much more likely. It's much more likely we will continue to see downside here, just given everything happening in the macro environment. But that doesn't mean we couldn't test 4,400, 43.75 or something. It could totally happen. All right, so SPX here is looking like we got some upside for the initial week. Okay, so we're gonna keep that in mind. Now the last instrument I like to have a look at is the dollar index. Oh, that's the wrong market we got here, DXY. And you can see that it's just getting absolutely trashed, the dollar index, which gives stocks and currencies room to move up. This is not looking like this doesn't look like it's finished to me. It could be, but I think there's a big chance it's going to continue to move down. So now we have actually three different aspects of the market all telling us that the VIX is telling us that we have room in the volatility index for some kind of move. The SPX is telling me that people would like to trade this up, and the dollar index is telling me that at least until we test 100, probably we're going to continue to see weakness in the dollar. So that supports some kind of move here on SPX. So we're going to keep this in mind. I'll show you how we use this information to actually extract money from the market, because this is giving us context for the week. Okay, we got context for the week, which is weakness in the dollar space and the volatility index, and SPX looking like it has a little bit more to go. It has a little bit of room for some upside here. maybe even 43.75, which would be almost 10%, which is quite significant. Now, what would make that happen? I don't know. I don't know what kind of news would trigger that, or, you know, the Fed starting to print money again, whatever. There's thousands of things that could happen that could make this happen. Right now we have this in front of us, 40.62. So we're gonna start having a look at this. 40.62, we got this move coming up here. We probably got some stops sitting here, and I bet liquidity will find its way to 40.62. And then the question is if it does some kind of false breakout and then dumps, maybe 41.50, something like this, and then back down to 37.50. I would not be surprised, right? Even if it does manage to break out here, then maybe something like this would not surprise me. That's a little high, but you get the idea. Okay. So now we know that the direction is kind of set for SPX. I mean, you can look at this. You can look at this right here. Now we're looking at 1 hour. Okay. You can look at this right here. You can see that it's starting to curl up, and this can be a fake, you know, curl or whatever you want to call it. But usually it's an indication of an active buyer being active. I believe this was a headline last week. I don't exactly remember what was the headline, but some headline caused this. But you can see it's a good, strong recovery we're having here so far. And I think it's gonna move above this. I think it's gonna move above here, and then we will see what happens. So if I were to trade this, I would be looking to buy the dips on this. You know, I'd look to buy here. If I'm trading 15 minutes, I'll be looking to buy even lower. And you don't have to worry, because these trades are automatically gonna show up on Sonar when they come into the picture. So here, and if this fails, now let's talk about this. If we buy this here and we have a trade setup looking something like this, and this were to get invalidated, I do think that's probably a longer. When we trade, in general, what we want to do is that we want to build trade setups that when we get stopped out of the setup, it's not just because, you know, we're getting stopped out of the trade, it's that our entire trade thesis is invalidated. Meaning that when we're looking to buy here now on this neutral level, which can be a little tricky, then it's really only for this specific setup where we are looking at the market doing, I don't know, something like this, and then trending down, and then a recovery, right? Or it could just be recovering down here and then up like this. The minute we these levels, and it shows that this 39.45 point, that it doesn't have any bias, meaning that if we see something like this, that's a very bad sign, and that would indicate that there's no bias here. And if we go back to the weekly time frame that we were looking at, and we paid attention to RTD, which showed us these repeated dumps, it means that this was just a slightly higher recovery. You know, this one, see how we have the local switching into an uptrend here, and then down below it, the global again, and then a retest, and then dump. Well, if this neutral level doesn't hold, that's already our first indication that this was, what we're seeing here is just like earlier. And this one we had this time was just the bounce from here, right? Just like we had bounce here and some kind of bounce here. It just shows that this bounce that was it, and then that means we can start looking for some downside. So that's how I'm thinking about this. That's how I look at this. Now, the last market I'd like to have a look at is Bitcoin, and then we're gonna look at some Sonar trades. So, given the information we just collected before from DXY, and we already have Bitcoin up, DXI and Wix, you know, we're expecting some weakness, a little bit more weakness in the dollar index. Maybe we get it, maybe we don't. But we're expecting a little bit more weakness. And as we get that weakness, usually Bitcoin responds to that in a positive way. So where is Bitcoin right now? If we turn strategy mode off here for a second and just have a general glance, well, Bitcoin is at a state where it moved out of this curling phase into a really big move, because a lot of people were forced to buy because they were shorting Bitcoin, and yeah, they lost a lot of money. So right now, it's not the greatest sign, to be honest, these two candles here. But the fact that we're still holding 2250 is something. But for how long? I think it's very reasonable to expect a retest of 20k. And whether we want to buy that or not depends entirely how Bitcoin gets down there. But now that we have gone so much above it with this last candle here, and we're not just looking from 21k, we're looking for 22k, it makes 20k a definite buy, at least in my book, because now we're so far ahead and we have proven buyers, and we're holding, the momentum is holding up here. It means that this is a good buy. It's no longer just a fake out with this and then back down. This is significant. So we want to keep a look at that and entertain that idea of buying 20k on Bitcoin if it comes down there, right? In the event that the VIX spikes and the dollar index gains some strength. So that's my thoughts going into this week. My thoughts going into this week is that not specifically Bitcoin, but SPX will show some more strength, and dollar index will weaken a bit. So that means also all currency pairs related to USD and so on. All of this will be impacted, most likely, from this. Okay, so let's go have a look at some Sono trades that's already been found for us. Let's start by looking at some daily setups, and we'll eliminate crypto, and I'm not too interested in bonds either, and let's just have a look and see what it brings. Got an exotic setup here on Singaporean dollar and Japanese yen. In general, with exotic pairs, you want to, these are low liquidity markets, so they can move very fast, very rational. Not maybe 5% of your trades should be on an exotic market. 95% of your trades should be on high liquidity markets. Okay, so we got Nvidia here buying the dip at 145, something like this, 150. Yeah, could probably be fine. Then we have New Zealand dollar, Japanese yen. It's a little tricky. Let's have a look. This is a little tricky. It's very messy. You can see this area has been repeatedly contested. And then we had this wick, and now it's moving up like this. So at this point, I'm not really assigning like high probability to this trade anymore, simply because that it has already played out. You can see this candle actually hit the entry zone and then hit the TP1 on the same day or next day. So, and it has also hit here before and here. So this is an order block zone that has already been played around with a lot, and this is a neutral level, which is kind of like a joker level. Means that when the price is below it, it's resistance. When the price is above it, it is a support. But as this level keeps getting tested and tested and tested, it really invalidates the level as whole, and means that this is probably not the greatest setup you can find, because it's been tested too much, used too much. It already was profitable, and now it's just getting into a point where either of these sides might break, and given the current setup of this and the Japanese yen and all the volatility in Japan, I would look for something else. For example, this is probably not the time, given that where the market is and the situation of everything that's happening right now, this is probably not the time to get into swing trades, meaning one-day trades. You want to be looking at 4-hour trades, 1-hour trades, or 15-minute trades. Let's have a look here. We got another exotic pair. So given the information we collected earlier, which was more weakness in the US dollar, and giving this setup, actually this would be I think this would be a very nice setup to take this short here. I think it got overextended. You can see that this market has been trading in some kind of whatever you want to call this, and then you can see it overextended. So the one thing that I have noticed happening very often with markets like this, where you have the market respecting some kind of trending zone, you know, where it's like within this bounds, and then it has an overextended move where it just absolutely dumps. Often what happens in these strong events is that as this starts to recover upwards and gets back to where it came from, which is a neutral zone, a lot of times it likes to go hard and test the other side again and then dive down again to the neutral level. So actually I'm not interested in this. I've seen this happen too many times. Oh, let's see. You can see it here. This is actually nearly identical to what I'm talking about here. You can see that this market had been trading in some kind of channel, whatever you want to call it. Then we have an overextension where the market goes too deep and then it recovers and it does some strange move. This is pretty common. So for that reason, I'm sitting this trade out. It's just low probability. Okay, Euro USD, let's have a look. This is a high liquidity market. I think we're gonna have a look at these markets that matters. Okay, so this is the same kind of setup. Keep in mind that DXY, right? We're expecting some weakness in the US dollar. And right now the euro is showing us some kind of weakness. So if it does come down here and test here, you can see we even have a gap here, then I think this would be an entertaining setup. I think this is a pretty good setup. I like the trend of the Euro USD as well. You can, let's have a look at this. Okay, let's talk about this. Whenever you have a market that consolidates below a level, dumps down, has a strong recovery like this, goes above the resistance level and starts to consolidate like this, and then starts to go beyond extension 1 like this, means that extension 1 is already invalidated. You can see it hit extension 1, had the immediate rejection and returned to resistance level, 73% probability, and already now it's recovering above extension 1. That's a very good sign of strength. Euro USD has been uptrend since November 2022, so there's a pretty decent buyer here at least active. So that makes me feel like this is a very confident setup. So if I wanted to go about, placing this trade, if we still have it, even if Sona doesn't show you this trade anymore, what you can do is that you just take your position tool over here, mark it out like this, and then it automatically calculates your position size and your risk, and you can enter your trade in a few seconds. Automatically calculated, risk managed for you, ready to go. Great tech. So that's the trade I'm gonna set up because I like Euro USD. Now what else do we have? GBP CAD on 15-minute time frame. Okay, so let's have a look at this. So this is not a USD pair, so we want to pay attention to what is going on here. So I think GBP CAD has a little bit more room for upside, probably 175. And we're currently getting a setup. Getting a setup down here. I think it's pretty nice. The stop loss is well protected here. If the stop loss goes, it's definitely gonna go deeper than this. For a very quick trade here, yeah, I think this is good. I think this works. Let's grab this one. Just like that. And now we just have to wait. All right, moving along, USD Singaporean dollar. This is like a Forex miner setup. Forex miner setup. It's actually at the entry zone right now. So the question is, do we want to take this? So this is a little bit of strength in the US dollar showing up here in the morning against the Singaporean dollar. And the question is, do we want to short this? God damn it. That is a nasty sell. I think we can find a better USD setup than this. So let's move along. We already have another one here. New Zealand dollar, US dollar. And this one is already in the entry zone. So you can see this one is actually an active trade that's open right now. So the question is, do we want to trade this? So that's probably the same strength. Okay, look at that. Again, we have resistance level. We have consolidation into extension 1. These are all signs of strength, but it can come to an end so fast. So here Monday morning, DXY, even if it's not showing it, even if they're not showing it right now, it's actually a bit of strength in the morning showing here. And that might just be what we need to take a setup like this. This, for me, this is a, this is a 1 hour setup, and I think it's pretty profound, because if we do expect, as we talked about in the beginning of the video, for the extended weakness in the US dollar and room for SPX to move up, I think this is the buy. So I'm gonna go ahead, even though it's not on my screen anymore, I can still take the trade. I just have to mark it out manually like this. And I'm gonna place 2. Alright, so you can see in this case that the New Zealand dollar market compared to my IC Markets account has a slightly different. There's a difference between the data feed and basically the broker that you're using, and to offset for that, we have 7 basis points. Do I want to accept this? Yes, I want the offset. Yes. Because what the offset does is that it maximizes my ability to get a good entry and make money from that. Because there's so many different brokers, and all of their instruments, all of their markets, they are slightly different from each other. A little bit higher in price, a little bit lower in price, whatever. But they're all trading. They're all trading the same, just slightly different numbers. And to account for that with the broker that you're using, and then the market that we are calculating everything with our algorithms on, we suggest to do this offset simply for you to get the best possible trade. Moving along, AUD CAD. AUD CAD. Let's see on daily first. What do we have? Looks like we have talked about this in November or something, since I have an arrowhead. It looks like it did go for more, but it also had, it's still going. It's a pretty strong trend here on AUD CAD. So can this continue? That is the question. And this is a 15-minute setup. For me, this is too tight. There's too much noise here on the left side of the market already working. It doesn't mean it can't be profitable. It's just, for me personally, this is not what I'm interested to see. Oh, there we go. There's the SPX setup we talked about earlier. Moving along. Let's filter a little bit. Add 4 hour. Let's get the I don't mind this setup at all. So this is gold USD, and setting up a long trade for us down here, I don't mind that at all. I think this is a pretty good looking trade. I'm gonna set this up myself. Very dramatic music. Okay, so I think that looks pretty good to me. Now I want to spread my entries slightly here because I think this is coming down with some volatility. And why is that? You can see how this zone before has been approached and dived a little bit into it. So I'm expecting that to happen again. There we go. That's what I'm satisfied with that. Moving along. A lot of inactive setups. Here we have silver against euro. These are two getting too old at this point. It looks like this is pretty much all the market has for us at the moment. So just going into the week, just keep that in mind and keep looking at the wicks, keep looking at the DXY, keep looking at SPX, because these are your main markets. These are your main markets that you want to pay attention to, and if they continue to play out like the ideas we had here on Monday, right? And ideas here on Monday was weakness in the USD, space, a lot of space in the wicks for some big volatility. And so that is our plan. That's how we have set up our setups right now, because we built context around this idea of trading this way this week. Now that can change at any moment, so it's important that we keep our eye on the wicks and see how it's behaving. It's important we keep our eye on SPX, and if it's behaving like we set out, like we built a scenario for. And it's important to look at DXY and see, is it behaving like we expected to, and like we envisioned here on Monday when we were setting up, because all of this can change in a minute's time. And if Wix just does like this, and SPX from here just dives, those are my best errors. This is the dollar. If the dollar index just strengthens and SPX will dump at the same time, the Wix will rise. If this is all happening not according to the scenario we built out, then we need to stop and we need to kill the trades that we have put on with the ideas that we had, and we have to look at the market again and look at what is happening here. And if this is if this is really, let's say this here, right, it's not gonna move higher and it's gonna start to move down and get down instead, then we have to immediately switch our mindset from this idea we had of some kind of uptrend or strength in the market for higher highs this week, and instead get ready to find short exposure. Now the good news is that as soon as good short exposure come onto the market, it will show over here in Sona. Just make sure your filters are set correctly, and the markets are set correctly to the ones that you want to trade, and you can just sit and wait for them to show up. These trades coming into Sona are really great trades. They are really great trades. If you're trading on the lower time frame, like 15 minute or 1 hour, then when you get a trade, you have to sit down and observe the trade. You have to observe, is it playing out like we want it to? Is it close to my TP? Then I will close, my TP and take profit. And you have to literally manage it, because on 15-minute time frame, these trades, they move so fast that if you are are not engaged with it, and you're just putting on a trade and you're not going to manage it, chances are you're going to lose out on money. You're going to massively reduce your ability to generate money from the market. You have to be there. And if you don't have the time to sit and do it, if you don't have the time to watch 15-minute trades and so on, don't take them. Don't take the 1 hour trades. Stick to the 1 day trades, because you can check in on these trades like once a day, and that's all you need to do. But we have to respect trading. We have to respect this, and you cannot expect as a new trader to just come in and just put on 15-minute trades and walk away and everything will be fine. It will only be fine if you sit down and you engage with it and spend time with it, because that's where you can extract money. Sometimes with these 15-minute setups, you can get a TP immediately, like within seconds that you get filled. Take the profit and get another trade from the same. It's literally free money, but you have to wait for it and you have to be in the right place at the right time. And that's why so few people actually manage to make money from trading, because they have the wrong idea of what it takes to become profitable and make money from trading. They have the wrong idea. Okay guys, I hope you enjoyed this Monday session. I can see it ran a little bit long. Now, if you have any questions, put them in the chat below. Otherwise, come talk with us in the global chat. And otherwise, I'll see you Wednesday for our live stream. Have an absolutely amazing week, everyone.